Okay, so now let's move on to trading view. So when we talk about trading view, as I said, it's where you analyze the market. That's basically where you analyze your trades. You come here, you analyze the trades you want to take, and then you go ahead to MetaTrader 5 after you've made your deposit in Exness, then you take your trade. So in trading view, it has many components. Do you understand? And the things we analyze in trading view is what we call the currency pair or a pair. Do you understand? When we talk about a currency pair, a currency pair basically talks about the combination of two currencies. Combination of two currencies. Meaning you are comparing two currencies together. That's what we call the currency pair. You are comparing two currencies together. Do you understand? And then we have what we call assets. So assets are generally like the tradable instruments of the market. Do you understand? The tradable instruments of the market we have a lot of trading instruments. Let me write that down as well. For those who are taking notes, you can start taking notes. Tradable instruments of the market. Okay, so we have a lot of let me give you examples of the currency pairs first. So examples, we have GBP USD. So meaning you are comparing what the Great British Pound to what the US dollar. Do you understand? We have another one, Euro USD. The comparison of the Euro versus the US dollar. We have, let me use our local comparisons. Let's say USD GHC. This is the comparison of the US dollar against the Ghana cedi. And for the Nigerian one, I don't know the comparison, so I'm going to leave it as that. So these are the examples of the currency pairs we have. So GBP USD is the comparison of British pound against US dollar, euro against US dollar, and US dollar against Ghana cedi. Do you understand? And then we move on to assets, which are the tradable instruments of the market. And as I said, example of assets are the currency pairs, as we have written over there. Currencies. Let me write currencies. We have crypto, and we have stocks. So stocks are generally the companies we have around the world. McDonald's, Netflix, LG, Samsung, Apple, all those come together to form what we call stocks. Do you understand? And then we have what we call stock indices. Okay, so when we talk about stock indices, we are talking about the combination of a lot of companies, a particular number of companies. So we have examples like US 30, we have NAS 100. So US 30 is the combination of 30 companies, NAS 100 is a combination of 100 companies, S&P 500 is a combination of 500 companies. Do you understand? We have the German 30, which is the combination of 30 companies in Germany. We have a lot of stock indices. Do you get it? And then we have what we call commodities or futures. Okay, so commodities or futures basically talks about how do we call it? Commodities or futures basically talks about the metals we have, the minerals we have, gold, silver, oil, diamond, and the rest. A lot of them. Do you understand? So those are the commodities or futures. Let me write it down. Commodities or futures. And then we have synthetic indices. Okay, so synthetic indices, they are only found on dairy. Do you understand? Synthetic indices are only found on dairy because they are the currency pairs that the dairy broker produced. They made synthetic indices, so you can't find synthetic indices anywhere apart from dairy. I'm going to be sending you guys a link to create your deriv account so that anytime you want to trade, you can just go there. So as I was saying, synthetic indices can only be found on dairy. That's where you have the volatility 10, volatility 10, 1S, volatility 100, jump 10, step index, boom, crash, and all of that. They are all synthetic indices. So that's what we call assets. They all come together to become what we call assets because they are the tradable instruments of the market. So the next thing we are going to move on to is what? Base and quote currency. Let me write that down. Base and quote currency. Okay. Base and quote currency. So when we talk about base and quote currency, let me give you guys an example. Okay, this is where the example comes in. Who is that? Please mute yourself. Please mute yourself. Please mute yourself. Okay. Please mute yourself. Everybody should just be on mute. Okay. Let's continue. So when we talk about the base and quote currency, let's take GBP USD for instance. Okay, I'm going to simplify all this for you. The pair that comes first, the pair that comes first is what we call the base currency. Okay, the base currency. The pair that comes first is what we call the base currency. And the pair that comes second is what we call the quote currency. Do you understand? The pair that comes second is what we call the quote currency. Do you understand? So what basically moves the market is the strength and the weakness of what? The base currency. Do you get it? The strength and weakness of only the base currency. So you comparing GBP USD against the US dollar, if GBP USD is strong, you have the market going up. If GBP USD becomes weak, you have the market going down. If it becomes strong, you have the market going up. If it becomes weak compared to US dollar, you have the market going down. You understand? So the movement of the market is purely based on the strength and weakness of the base currency being compared to the quote currency. Do you get it? Good. So that's it for base and quote currency. And I've also talked about what moves the market. So the next thing we are going to go to is what do you call it? Broker. Do you understand? So we are going to go to the broker. Guys, hold on. Let's check on a couple of trades. Let's check on GBP card. Let's see what's happening. Wow, GBP card is still selling. As you can see, I sent all the signals to the group earlier this morning for free. I sent all the signals to the group. Let's check on. Okay, USOYO is also approaching TP1. USOYO is also approaching TP1. I had an entry on Euro NZD, but it's not clear yet. Let's check on BTC. BTC is also selling. I like that. BTC is also selling. Everything is just playing out perfectly. Everything is just playing out perfectly. Okay, let's go back to gold. Okay, gold took our SL. Okay, gold took our stop loss. So we are out on gold, but the other trades, all other 4 trades are playing out except gold. Okay, I was very how do I say this? I was very confused about this particular trade over here. I don't know why I jumped into it though, but yeah, it is what it is. So let's continue. Let's move on to what we call the broker. Okay, so a broker basically is the bank, your trading bank. I always tell my student that your broker is your trading bank. That is the easiest explanation you can find anywhere. Do you understand? So your broker is like where you keep your money. You deposit your money over there. When you make profit as well, you go there to withdraw your profit. That's what we call a broker. That's basically what the broker does. Do you get it? So the broker provides you with the market for you to trade, because you can't just go to MetaTrader 5 and say you want to go and trade. You need someone to provide you with the market. It's like a betweener between you and the original market. Let's say you want to buy a biscuit. Do you understand? You can't just go straight to the factory and tell them you want to buy one biscuit, one wrap of biscuit. They are not going to do that for you. You need to have someone who is going to be a betweener between you and the company, the biscuit company. And that's what the local vendors we have. Those local vendors are our biscuit brokers. Do you understand? So you give them money and they give you the biscuits. So that's basically how it works. You can't go into the general market and say you want to buy GBP USD or you want to buy XAU USD. You need a broker to provide you with that market data. Do you get it? US oil is pumping crazily. So guys, keep an eye out on US oil. Once it hits take profit, you let me know, okay? Keep an eye on US oil. We are going to smash take profit in a few minutes. So keep an eye on US oil, okay? Let's go back to let me set an alert for US oil. Alert. Set an alert. So guys, for those of you who want to know how we set an alert, you just click on where you have marked out as your TP1 or your line you are waiting for price to react to. Then you come to add alert at the top over here. You click on add alert, then you put your alert title over there, your alert message. So TP1 hit, and that's all. Create alert. So immediately price touches my TP1, it's going to give me an alert to my phone or to my computer to tell me that US oil has hit my TP1 and I should come and do whatever I want to do with it. Okay, so let's come back to what we're talking about. So I've explained what the broker is. Now let's explain what consists of, like, what the broker basically does. Okay, so as I said, the broker is the betweener between you and the normal market. That they provide you with the market for you to trade with. That's where you keep your money, that's where you deposit your money, and that's where you withdraw your money when you make profits. So the next thing we are going to talk about is um, leverage. Do you understand? So leverage is basically the amount of money the broker lends to you for you to be able to take some trades in the market. Do you understand? Because we depositing those $10, $20, $50, $100, $1,000, those things cannot be tradable in the original market. The original markets are trading hundreds of millions of dollars. Do you understand? Ten thousands of dollars, hundred thousands of dollars. They are trading a lot of money, not the small coins we are trading. Do you get it? So the broker actually gives you leverage for you to be able to have a big account representation in the big market for you to take your trades. Do you get it? That doesn't mean you can be able to withdraw the money the broker is representing you with. They're only representing you with that money. You can't withdraw it. So let's say you have a $10 account. Let's say you have a $10 account, and then you are using a leverage. We have a lot of leverages. When I make the video on how to connect your XNS to your MetaTrader 5, I'll go more into detail on leverage so you guys will see it. I'll post it on YouTube. Okay, so let's say you have a leverage of you have an account of $10 and you are using a leverage of 1:200. Okay, that's your $10 being multiplied by what? 200 in the main market. So you are having $2,000 in the main market. That won't be able to take any trades. You get it? You can take some trades, but you can't be able to maximize on those trades. That's why anytime you are flipping an account, I advise you guys that you should use a leverage of 1:2,000, meaning your $10 is being represented by 20,000 in the main market. So you can be able to add more positions to your trade. You get it? It doesn't mean that 20,000 you can withdraw. You can't withdraw it. No, you can't withdraw that money. That's how come sometimes you'll be in a trade and the trade will be going against you. You will have your account run into the negative before it blows, or to run into the negative and come back into profit. Once it runs into the negative, the broker is preparing to withdraw their money. Once they see that it has exceeded some negative limit, they will close your account, meaning you've blown your account. But if it goes into the negative and comes back, meaning you didn't exceed that negative limit and they brought you back from drawdown. Do you understand? So that's what the leverage basically is. So let's say you have a 500, let's say you have $100 account, and then you are using a leverage of 1:2,000. Okay, when you are using a leverage of 1:2,000, meaning you have about, let me say, $200,000 representation in the main market, meaning you can be able to take a lot of trades. Do you understand? So for those of you using a leverage of 1:100, 1:200, and all sorts of stuff, you can't be able to maximize on your capital when you want to take some trades. Do you get it? You can't be able to maximize on your capital when you want to take some trades. So I advise you use a leverage of 1:2,000 so that you can be able to add positions when your market is in profit, or you can just maximize on your capital when you want to take some calculated risk. Do you get it? So that's basically what the leverage is. I'm simplifying everything to the beginner's knowledge. You get it? I don't like to use a lot of technical terms and all that. I like to do the demonstration so that everybody gets what I'm saying. They will move very, very, very fast. Do you understand? The next thing we are going to talk about is commission and spread. Okay, so commission and spread. When we talk about commission and spread, commission is a fixed amount of money that the broker deducts from your capital anytime you take a particular trade. Do you understand? So a commission is a fixed amount of money that the broker deducts from your capital anytime you take a particular trade with a particular lot size. We'll talk about lot size when we get to MetaTrader 5. Don't get confused at all. Just relax. If you are hearing some terms you are not like you are not conversant with, you just need to relax. We'll take care of all of them when the time comes. Okay. Okay. Someone has a question. Okay. Who raised their hand? Who has a question? Okay. Nobody has a question. Let me continue. Okay. So when we talk about commission and spread, commission is the amount of money that the broker will charge you when you want to take a trade. Do you understand? And spread is basically like the amount of profit or loss the broker will charge you before you take a trade. Do you get it? Before you take the, so meaning, let's say you are going to take a trade and the trade is at 1, okay, and you are entering for a buy. If you're entering for a buy, the broker is going to take you into the negative before you come into profit. So that amount of times you've gone into the negative, that's the amount of money the broker has charged you. Okay, that's the amount of money the broker has charged you. With that one, your capital is still intact, they won't deduct anything. But once you take the trade, you are going to run into the negative before you come into profit. Do you understand? You're going to run into the negative before you come into profit. So let's say the price is at 1 and you want to take a trade. The broker is going to run you up for the trade at maybe -3, meaning you are down -2, you are down -3, you are down -3 before you come into profit. Let's say the price is at 1 and you want to enter for a sell. The market is going to run you up at 4 or 3 before you enter into profit. So it's not going to give you the entry price at the particular price you take the trade. Do you understand? It's not going to give you the entry price at the particular time you take the trade. It's going to send you way above or way below by maybe by 2 or by 3 before you take the trade. So you run in a loss of minus that amount of times the broker took you by before you take the trade. So that's basically what spread is, and it's advisable to use spread than it's advisable to use commissions than spread. Sorry, because with commissions, there's no manipulation. Once you take the trade, this is the amount of money they are deducting, so they will immediately deduct that money and leave your trade for you. But when you are talking about spread, some brokers tend to manipulate the spread when the market conditions are unusual. So I don't advise you guys using spread. I advise you guys using commissions better than spread. Do you understand? So let's go to the last topic of today, which is MetaTrader 5, market orders, stop loss and take profits. Okay. So MetaTrader 5, as I said at the beginning of this session, is your trading app. Do you understand? MetaTrader 5 is your trading app. So your trading app is basically where you go to take your trades after you've analyzed them in trading view. Do you get it? That's where you go to take your trades. Do you understand? So for MetaTrader 5, we have what we call market orders. That's how you take your trades. Market orders. We have a lot of market orders. We have the buy stop, we have the buy limit, we have the sell stop, and we have the sell limit. These are the main market orders we use. I'm going to get into that when we get to MetaTrader 5. Okay, for those who don't know when we are going to get to MetaTrader 5, you need to go and check the course outline. I dropped it, I think, yesterday. So just go and check the course outline, and you are going to see when we are going to have our first MetaTrader 5 lesson. Okay, so market orders, as I said, they are the buy stop, buy limit, sell stop, and sell limit. And then we have the direct market orders, which are the buy and sell. That one you enter them instantly. So those are the market orders we have for MetaTrader 5. And when we talk about stop loss is a specific amount that you set or number you set for price to opt you out of a trade when you are running at a loss. So let's say you want to risk $30 for a trade. A stop loss is the calculated number you set that, okay, immediately price gets to my $30, you should automatically close the trade for me, and vice versa for the take profit. It's also a calculated amount you set that immediately price gets to your specified profit level, it should automatically close the trade for you. So that's basically what the stop loss and take profits are. Okay, summarize this whole topic. The session has been recorded, so I'll be dropping it for you guys on YouTube very, very soon. After I'm done with the editing, I'll drop it for you guys on YouTube very, very soon. So that'll be all for today's lesson. I'll be taking questions now, but before that, let's check on our trades. Okay, let me clear this page first, and then we'll go and check on our trades. Let me clear all this. For those of you who took the trade, you should be in like profits by now. You should be in some crazy profits by now, and congratulations. You should start securing some profits for yourself. Okay, so for CAD JPY, we are moving up to take profit very, very soon. For those of you who don't know how I took this CAD JPY trade, you can see same break and retest on this zone, on this high. You can see that we missed the first entry, so immediately price came there. We were supposed to take it, but waited for a confirmation, which was this bullish engulfing candle. Then we took the buy to the upside. Okay, and then let's check on US oil as well. Very good. US oil is almost at our take profit one. Almost at our take profit one. We already hit a sell on gold, and you can see after we hit a sell, price has started to dump. Let's go to GBP card. Wow, GBP card is also almost at our TP1. Let's check on BTC. Okay, BTC is also moving choppily, but bit by bit moving to the downside. So guys, that's it for today's lesson. As you can see, we are on profit on all our trades, all 4 trades except gold. That'll be all for today. When is our next lesson? Let me check when we have our next lesson. Hold on, I'll take your questions shortly. Hold on, let me check when we have our next lesson. Okay, our next lesson is on Saturday. That's 6:30 p.m. Okay, so on Saturday, we are going to move on to the next topic we have. That is trading view. Okay, that is trading view. Let me take your questions. Clever mode, what's your question? Okay, okay, so let's go to BTC. Okay, so for BTC USD, the trade was analyzed in the 1 hour time frame. Okay, trade was analyzed in the 1 hour time frame. Can you see this resistance level that BTC reacted from? The one I marked out over here. Can you see that? Yes, so that's the resistance level BTC tapped into before going to the downside. But you can see that I didn't take my trade immediately. I waited to get this confirmation we have over here, which is this evening star candlestick confirmation over here before I took this particular sell to the downside on BTC. This is an evening star candlestick confirmation. I could have entered off of this bearish engulfing, but now I waited for a while because the next candle that opened was moving bullishly, very bullish. So I had to wait for extra confirmation to take this trade. That was this particular evening star candlestick confirmation before I sent the signal to you guys. So that's easy. That's as easy as it gets. Okay. Is there any other question before I end? You're welcome. Okay, so Prince has a question. Prince Henry, what's your question? Let me take these 3 questions and we are done for today. Prince Henry, what's your question? Okay, good. Okay, very good. That's a very, very good question. That's a very, very, very good question. I like that. Okay. So for gold, my mistake was I was going a little bit against the trend. Okay. I was going a little bit against the trend because I saw a little bit of bearish momentum. I already have my resistance zone, already had my resistance zone marked out over here. And then I had price moving in an uptrend. It was moving bit by bit, but it was generally in an uptrend. What I had to do was to wait in the higher time frame to get an entry. But I was in a haste and then I went into the lower time frame to get an entry. So coming into the lower time frame, I didn't even wait for any proper confirmation. After I got this bearish move to the downside, I took my sell and you can see gold came down a bit but came to take my stop loss. If I had waited for a proper confirmation, I would have entered off of this bearish engulfing candle right over here, and then I'll be in crazy profits by now. As you know, I would have been in crazy profits by now because my initial analysis for this BTC for this gold trade was a buy at this other block over here. I don't know why I went to take this trade though. I don't know why I took this trade. Let me show you guys the trade I had first on this particular gold trade. I had my